Good evening, guys. You can see time is around 11. Let's look at today's Nifty 50 as well as Bank Nifty trade analysis. First, let's look into Bank Nifty. So you can see the market actually gapped up, and if you see the market gapped up at around 300 to 400 points, 350 points, and you can see the market staying above the mid of the first candle, the 5-minute zone, as well as the anchor wave level, and even broke the high of the first candle, clearly signifying some sort of bullishness. And the market retraced back. So if you consider this break of structure and this retracement, guys, so if you try to plot the Fib extension levels, Fib levels here, the common point between this to the common point between this, you can see the market is staying above the 550 level over here. This is the 550 level where the market is trying to stay above. And if you look at a higher time frame in a 5-minute zone, and if you look at this, you can see the market clearly staying above the 9 as well as 21 moving average, and the market is consolidating above the anchor VWAP level. This is the day VWAP level, guys. So you can see market is consolidating above the day VWAP level, clearly signifying some sort of bullishness. And you can see the market is very bullish, guys, as the market is trading above this zone. So this is the 550 level if you look at 1-minute time frames. And if you try to plot the Fib extinction levels of this zone, the common point between this to the common point between this to the common point between this, you can see you could have targeted the 1.68 level. And as the market reached here, it formed a rejection candle, but couldn't break this low on, and the market is consolidating in a sideways and couldn't even cross the 21 moving average. You can see this whole trend in a 1-minute time frame. The market was trading all the way till here, guys, above the 21 moving average, clearly signifying bullishness. And you can see this is the 4.2 level. This is the 4.23 level, and you can see how the market came all the way to 4.23 level. So this today's trade is just as simple as it is, guys. You can see that you could have taken a long position here, keeping your stop loss just below this candle, and you could have traded all the way to 4.23 level. Or you could have exited your trade as soon as you could have seen this kind of candle breaking both 9 as well as 21 moving average towards the downside. So this is where you could have exited your trade. One confluence is the 200 moving average, guys, where the 200 moving average is below the price. The price is trading above the 200 moving average in a 1-minute as well as the 5-minute time frame, clearly signifying bullishness. And the market is consolidating above the 9 as well as the 21 moving average. Again, it confluence another sort of bullishness, and the anchor VWAP, the day VWAP level where the market here is also trading above the 9 as well as 21 moving average, another confluence where the market sentiment is also bullish. And you can see a lot of bullish setups, guys. So you could have easily taken long position expecting the market to go higher and higher, and this is how you could have easily taken and traded profitably. So, and you can see after this the market didn't even retrace towards the VWAP level nor the 200 moving average, and the market was trading above the upper limits. Not even the market retraced. If you see the Fib extinction levels, guys, so if you try to plot the Fib levels, the low to the high of this candle, so you can see clearly the market didn't even retrace this 0.38 level also, clearly signifying that the market sentiment is very bullish. And but what you could have done is that you could have entered short position here, guys, keeping your stop loss just above that candle after seeing this kind of huge bearish candle, expecting the market to go further towards the downside. So if you consider this chalk formation over here, so if you consider this breakout structure, or even the market even broke this low, so if you consider this breakout structure, guys, or you can consider this change in character, and if you try to plot the Fib levels here, the high to low of this candle, you can see price rejecting from 550 levels over here. This is the 550 level where the price is rejecting. So the market retraced to 550 levels and rejection of price from that levels. So if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you could have easily targeted the 100% move. Or in case if you could have traded the common point between this, so in case you could have traded the mid of this candle, so you can see clearly the market came all the way to this zone. So you could have targeted the 100% move, guys. You can see how the market came all the way to this 100% move. So this is where you could have taken another short scalp, where you could have kept your stop loss just above the 50 levels and targeted the 100 moving 100% level. This is one short scalp where you could have easily taken. And you can see after this, the market continued further selling towards the downside. Guys, you can see this kind of selling pressure where the market clearly broke this low as well. So in case if the market sentiment would have been bearish, the market would have continued further selling. So you can see there was a very good retracement after this kind of huge impulsive momentum, and the market would have retraced like this and continued further selling. But what happened is that after this kind of selling pressure, the market formed another piercing pattern and even broke this high as well, clearly changing the market sentiment from being bearish to bullish. And you can expect a chalk formation. So if you try to plot this demand over here, you can consider this to be a 1 minute order block. So you can see how the market again retraced all the way to this 1 minute order block, and you could have easily entered long position, guys, here, keeping your stop loss just below that candle itself when the market retraced to this 1 minute order block. And you could have targeted the, if you try to plot the fib extinction levels, the common point between this to the common point between this or to the common point between this, you could have targeted the 1.68 level, guys. You can see how the market came all the way to 1.68 level, and this is where you could have exited your trade. Look at this, guys. This is where you could have easily exited. Or in case if you consider this swing momentum, guys, if you consider another order block formation over here, you can see the market came all the way to this zone. Here there was another 1 minute order block which broke this high, the last down candle which broke this high, and even this high, guys. So you can expect this to be a 1 minute order block, and you can consider, you can see how the price came all the way, rejected price from this 1 minute order block, and reached all the way to 1.68 level. This is how you could have easily traded on Bank Nifty. So once if this order block has been mitigated, it doesn't hold any value, guys. And you can see after this rejection of price from 1.68 level, the market continuously rallied towards the downside and even broke this low. And the market came all the way to this fair value gap here. You can see the market came here to this fair value gap, mitigated this zone, and continued further buying over here. So you can see here the market clearly didn't break this low, guys, with this kind of huge momentum. You can see in case if the market sentiment would have been clearly bearish, the market would have broken these levels with huge momentum, breaking even this low, guys. So with one momentum, it could have easily broken or even broken this low as well. But here you can see the market here couldn't even form a clear breakout structure, and after that the market again retraced back towards the upside because there was a huge demand over here, guys. You can consider this zone as to be a demand zone, and the market came all the way to this demand zone and continued further bullishness. So you can see here the price is consolidating above the 9 as well as 21 moving average. And if you try to plot the anchor gap levels here, you can see the price taking support and rejection of price from 21 as well as 9 moving average as well as the anchor gap levels. Here it faced rejection, but here it clearly broke and rejected price for this. So in case if you use anchor gap levels, guys, you could have easily entered long position, keeping your stop loss just below that level. Or if you consider this whole swing as one structure, guys, which clearly broke this high, and you can consider this to be a chalk formation, and the price retraced towards that level. So if you consider the low of this candle to the high of this candle, you can see, or if you consider the common point between this to the common point between this, you can see how the market came all the way to 0.38 level over here. This is where the market retraced back to the 0.38 level, where the price took support and continued further bullishness. So if, in case if you try to plot the fib extinction levels, so you can consider this to be an order block, guys. So if you consider this common point between this to the common point between this to the common point between this, so you could have targeted the 1.68 level, or you could have targeted all the way to 2.68 level, I think. Or if you consider this whole swing as one momentum, guys, so if you try to plot the fib extinction levels of this whole swing, the common point between this to the common point between this to the common point between this, so you can see how the 1.68 level you could have targeted, or you could have targeted the 100% move. See, after this kind of huge bullish candle, the market rejected price and consolidated in a sideways and formed another bullish candle, but here it couldn't sustain this kind of bullishness and continued further selling towards the downside. So this is where you could have easily exited, guys, the 100% move, where you could have easily exited your long position. So a stop loss of just small 5 to 6 points, and you could have targeted all this way towards this level, guys. This is where you could have targeted, and you can see this kind of huge aggressive selling which clearly broke these levels, and again the market retraced to these order block levels. And you can see once this order block has been mitigated, it doesn't hold any value, and after this kind of huge selling pressure, you can see how the market again targeted all those buyers, sellers over here. You can see whoever might have sold here, guys, who might have sold, all the stop losses has been hit, and only buyers are there, guys. You can see from past 5 days there is only buyers sitting in the market, and whosoever sellers have entered the market, all those stop losses has been hit because there is a lot of aggressive buying, and you can see how the market is trying to trend very aggressively towards the buy side. And this is the order block, 1 minute order block, and you can see you could have just tagged this kind of swing momentum, or in case if you try to plot the fib extinction levels of this momentum, guys, the high of this candle to the low of this towards the high of this candle. So if you use common point, I think it's better, right? The common point between this to the common point between this. So you could have targeted all the way to 1.68 level. This is where you could have easily targeted your short scalp, or you could have targeted till the 200 moving average. So short position, short position here, guys, keeping a stop loss just below that candle and targeted all the way to 1.68 level. This is where you could have targeted. So I hope you're getting what I am saying, guys. You can see the first trade where you could have targeted. It was a very huge trade, guys. You could have just hold on to your winning trades and trade as long as the market is moving above the 9 as well as the 21 moving average. And you can see as long as the market was trading above this zone, you could have easily ride this trend. And only after this kind of huge aggressive selling candle only you could have expected, or you could have exited your long trade. And you could have entered short straight here, and you could have targeted the 100% move. And again, this kind of sudden momentum where the market formed chalk and there was a demand over here, again the market retraced and you could have scarred towards the 1.68 level here. This is a 100% move where you could have targeted, where the price took support from anchor VWAP levels here, and uh, as well as the 9 as well as the 21 moving average price taking support. So for this short scalp where you could have taken, you could have placed another anchor way up level. So you can see after this kind of huge bullish candle, the price rejected from 50 levels and continued further, where you could have taken short trade, and you could have made another decent amount of profit during this trade as well. This is another confluence, guys. Anchor VWAP levels place another confluence for you to take trade. So this is about Bank Nifty. So let's look into Nifty 50 trade analysis. So in Nifty 50, you can see the market initially quite more opposite to the market direction, targeting initiating sellers to enter the market, but the market clearly targeted all those sellers, and with continuous bullish momentum, the market head towards the buy side. And you can see here the market, this is the middle of the first candle and this is the 5 minute time frame. So you can see the market here consolidated above the 5 minute zone as well as the middle of the first candle, and clearly the market broke this low, guys. You can see here is where the market clearly broke structure towards the downside, and you can consider this to be a break of structure. And you can see the market again retraced back towards the upside, but rejected price from 5 minute zone as well as the 29 moving average and continued further selling. Or in case if you try to plot the fib levels here, the common point between this to the common point between that, you can see this is the 550 level also, where the market reached all the way to 550 levels and continued further selling towards the downside. So if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see the market came all the way to 100% move. This is where you could have targeted the 100% move, and start position here, guys, keeping your stop loss just below that candle, and you could have targeted all the way to 100% move. This is just a short scalp where you could have taken and made a decent amount of profit. So you can see after this kind of huge selling, the market would have continued further selling towards the downside. But what happened is the market, after this 100% move and with this proper retracement, the market here took support from this zone and continued further bullishness, guys. This is quite unnatural or quite out of the price action where there is a market manipulation, and you can consider this whole price action which formed before this kind of momentum is all the manipulation, guys. You can see how the market makers manipulated sellers to enter the market here, and with this kind of huge momentum towards the downside where all those sellers have been targeted, and aggressively the market again uh, went out of the direction of how the price action would have been followed, and you can see this kind of huge aggressive momentum towards the upside, targeting all those sellers, guys. You can see how the market clearly broke even this high, clearly signifying a chalk formation over here. And this kind of momentum towards the upside is quite not natural towards the inclined direction. And you can see how the market here taking support from 9 as well as 21 moving average and price rejecting from these levels, clearly signifying some sort of bullishness. Or else if you could have plotted the anchor gap levels here, you can see here is where you could have easily taken trade over here, where the price is consolidating above the 9 as well as the 21 moving average as well as the anchor gap levels. So in case if you might have taken long position here, keeping your stop loss just below this candle itself, guys. So this anchor gap levels level is where you could have traded. And if you consider this kind of manipulation over here, so you can see there is not even a proper retracement only, guys. You can see after this kind of consolidation, you can see the market even broke this high. So if you consider this swing momentum over here, so the low of this candle to the high of this candle, you can see how the market took support from 0.38 level over here. This is where the price is taking support. And if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this, you can see you could have targeted all the way to 1.68 level or the 2.68 level, or you could have targeted the midway between the 1.6, 2.6 or 3.8 level. So I think you could have targeted all the way to 1.68 level. This is where you could have easily targeted your long position, guys. So this is the 1.68 level. So you could have entered another trade over here, keeping your stop loss just below that candle and targeting all the way to 1.68 level. This is another trade setup. This is another trade setup where you could have taken, where price is rejecting price from the 9 as well as the 21 moving average, or you could have traded in this way also, guys. You could have entered here, or you could have entered here, or you could have entered here where price is consolidating above the 9 as well as the 21 moving average, clearly signifying some sort of bullishness. This is where you could have easily entered, guys. So you can see how the market here behaved. And you could consider this kind of swing momentum over here, the last down move towards the last up move over here. You can see price taking support from 50 levels, and again the market continued towards the bullishness. This is a 50 level where the market retraced all the way to 50 levels. And if you consider this swing momentum over here, so the common point between this to the common point between this to the common point between this, you can see you could have targeted all the way to 100% move, or in case if you could have traded, you could have traded the midway between the 100% or the 1.68 level, which I have already mentioned to you previously, guys. This is 0.5% of the 1.6 as well as the 2.68 level. You can see how beautifully the market came all the way, and you can see this kind of huge bearish momentum, guys, which where the market clearly broke this low over here. You can see some kind of aggressive selling, and the market even formed a chop over here, and the market retraced to that level. So in case if you try to plot the anchor gap levels, you can see in case if the market sentiment would have been bearish, the market would have rejected price from that levels and continued further selling towards the downside. So if you try to plot the fib levels, this is the 50 level. So after the price rejecting from 50 levels, the market would have continued further selling towards the downside. So this kind of chalk formation, the market would have retraced in this kind of balanced move and rejected price from these levels and aggressively sold like this, guys. This is how usually the market behaves in case if the market sentiment would have been bearish. But you can see when compared to this kind of huge selling pressure towards the downside, this kind of aggressive selling is very dominant, guys. So in case if you try to plot even the anchor gap levels here, you can see price rejecting from this anchor VWAP levels, and here also the market of this anchor VWAP level and as well as this anchor VWAP level is where the market here forming support over here. So you could have even entered your long position here, or after this kind of consolidation also you could have entered long position, keeping your stop loss just below that candle itself, above this candle itself, and you could have targeted all the way towards the 1.68 level. This is where you could have easily targeted, guys. 1.68 level is where you could have easily targeted. So this is where you could have easily targeted. This here there was one setup where you could have easily traded, or you could have even traded above the 9 as well as the 21 moving average over here, or you could have traded here above the anchor wave up level. So you can see here there is one anchor wave up level and there is another anchor wave up level, and this both anchor wave up levels here forming some sort of confluence here. And this is how you could have easily traded all the way to 1.68 level. So this is about Nifty 50 trade analysis. So in case if you find my videos helpful, guys, please like, share, and comment. Uh, keep supporting our channel, guys. In case if you find my videos helpful, and it would be helpful for my YouTube algorithm to grow. And this is about my trade analysis, guys. And this is as simple as it is. So there is no much complication, and you could have easily taken made a decent amount of profit trading with a small risk to reward ratio. And I think that's how I am teaching you the best entry models and the best exit models, where you could have easily entered the trades and exited with a very good risk to reward ratio and a very good profit, guys. All my trades are like a very good trade, guys. Minimum 1 to 6 is how I usually try to teach you, with a very small risk to reward ratio. And with a lot of practice you can definitely learn my style of trading, guys. I think I have another way of trading also, which I would like to teach you further. But as of now, the smart money concept and the price action and candlestick psychology is very basic, and for trading in Indian markets you need to find out what the market is trying to do, where the market is trying to trap buyers or the sellers, and how you should enter and position size your trades and manage your risk ratio. This is how you need to learn, guys. Only then you'll be become a profitable trader. So I hope you're getting what I'm saying. So in case if you find my videos helpful, guys, please like, share, and comment. Share my videos with your friends and family. And in case if you want to keep in touch with me, you can message me through my Instagram, or you can leave a comment below. I would definitely love to read your comments. And thank you, guys. Thank you for your love and support.